Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here with another episode of understanding and decoding the global factors and the domestic factors and analysis on several currency pairs. So first, as usual, we talk about the FPI flows. It has been a tremendous last 3 months. If we talk about June, July, and August, the flows has been positive on both equity as well as on the debt front. Also, if we talk about the month of September, we have seen positive start for equities with around 7,000 crores of inflows, while a flattish start for the debt segment with around 200 crores of inflows. Though, all in all, till now, I think it's been 3.5 months or 4 months now where we have been seeing these positive flows hitting us. So it's something which is positive for us. Secondly, if we talk about the global scenarios, it's important to understand what's happening with oil, because if you see, oil prices have cooled off sharply. They have moved towards almost $73 per barrel. That is the Brent crude price, and even WTI moving below 70 also. So the main reason obviously remains that there is demand concerns, and the supply is overboarded into the market. And now the trigger point was Libya, where they think they will be resolving their issues, and once again Libya will start producing and supplying. So if that happens, furthermore supply gets into the market, which pushed the oil prices lower towards $73 per barrel. Now, obviously, this is another positive for the rupee, where we have seen flows being positive. We are now seeing crude oil prices being lower, where we being in more of around 70% of oil importer. So this acts in our favor. But still, what we are witnessing is dollar rupee still is struggling. If it is a rupee pair, I mean, particularly, it's being in the range of 83.90 to 84. What's wrong with it? I mean, what is stopping it? If we see the forward premiums have still bounced towards 2.12% annualized 1 year premium. So this tells us that there is an importer demand, obviously at lower levels, and also paying side interest has been seen. So this is again pushing them. Also, the Asian currencies have been struggling. I mean, that is another reason where rupee is also struggling a bit. Lastly, if I talk about the Federal Reserve, so if we talk about the policy and the data points, we recently saw data points of the manufacturing PMI data which were not in sync. Even for China, the manufacturing data points were weaker. Overall, the dollar index did see a low and then bounce back towards 102, near 102 levels, we can say, from almost near the lows of 100.60, 100.80 zone. So that's a decent bounce which we have seen, and the data points being weaker also suggests somewhere that the market participants are also shifting from one hike to like, or maybe a 25 basis hike to a 50 basis hike in this policy itself. So as per CME, almost around 31% were predicting before the manufacturing data that 50%, 50 basis hike will be done. But now, after the data point being weaker, it has gone towards 40%. But personal anticipation still remains that in the September FOMC policy, we personally foresee only one 25 basis rate hike at this point in time. Overall, three hikes is what we are targeting. We feel that it's too aggressive to go for a faster hike at this point in time, considering inflationary pressure still curtails, and plus geopolitical, I mean, the concerns are still not yet over. So they may become silent from the Middle East perspective, but one flare and things go the other way around. So for dollar rupee pair, personally, again, we believe that overall broader range still remains 83.70 to 84, but a break above either of the levels can expose levels towards 84.15, that is the NDF highs, while on the lower end, 83.70 continues to act as a major support. So that's all from my side, friends. Thank you so much for your time and have a wonderful day ahead. Thank you.